Welcome. I will be doing a deep dive analysis into an EV stock which counts TikTok parent ByteDance as an investor. And this company reached its 50,000th delivery benchmark quicker than Tesla, Nio, or Xpeng. I promise that if you sit through this video, you will agree by its conclusion that you see this company in a slightly different light. We have seen electric vehicle and growth stocks take a beating in the last few months. It's probably been an uneasy time for many investors like myself. However, it might also be a great time to shop around for an investment with solid fundamentals, as the EV sector is still primed for lots of growth. Let's take a quick look at how the EV stocks have been performing the last few months. Not very pretty, but Warren Buffett once said to be fearful when others are greedy, and greedy when others are fearful. Maybe it's time. In this video, I will be looking at liauto, which is an EV stock in China. I've been living in China for a few years now. I drive on the roads here and get stuck in horrible traffic like the locals. Even more importantly, I've been considering replacing my current car with an electric one. As such, I've been doing lots of research on the EV options available here and considered all the upsides of each brand. Ultimately, I think that this stock is undervalued given its exceptional growth, and it has a lot more potential that many people fail to recognize. This is understandable as most investors and YouTubers don't live in China. Let's take a look at two companies that might have a good idea of what the Chinese market wants. Both of these have backed Li Auto with seed funds before it went public. The first needs no introduction. ByteDance is the owner of TikTok and its equally successful Chinese counterpart, Douyin. The second is Meituan, which is a $200 billion Hong Kong-listed company that has a huge digital platform which provides reviews and easy access to retail services, travel, and even food delivery in China. The Meituan founder personally invested more than $300 million in Li Auto because he believes that the founder of Li Auto will do a smashing job. As someone who lives in China, I can say that both of these are very prolific businesses over here, and that these highly successful companies seem to recognize the potential in Li Auto. And Li Auto has in return delivered more than 50,000 cars in only 17 months, a new record among the EV companies. For those of you who are looking for a rocket to the moon play, this is probably not it. But in times of uncertainty like these, where the FOMO crowd is in hibernation, it's a great time to pick up a stock or two with solid fundamentals for huge growth in the near future. And what better time than now when prices are comparatively cheap? Now, some of you may be short on time. If you would like to jump straight to the technical reasons as to why the stock stands out, you can skip to the 10-minute mark. However, you may be missing out on some important background information as to why this stock has such good fundamentals. There are three Chinese EV stocks that trade on the Nasdaq. Nio is of course the best known among these. Li Auto has got the lowest profile of the three because it has the lowest total sales volume, but I'll come back to this later as I think it is somewhat misunderstood. Tesla is obviously not a Chinese EV brand, but I thought I would bring up some recent news about Tesla in China, just in case some of you may have missed it. So at a recent auto show in Shanghai, and this was a big event, a lady climbed up onto the roof of a Tesla Model 3 to protest her dissatisfaction with her car. She claimed that the Tesla Model 3 was of poor quality and that the brakes had issues which she claimed was putting drivers' lives at risk. Tesla initially tried to defend itself and dismissed the woman's claims as an attempt at a payout. But the Chinese government stepped in and called Tesla arrogant and said a bunch of other stuff. Tesla then had to make a public apology. Now, there's been some speculation that she was sent to disrupt the Tesla event, but I will avoid delving into speculation here. But to be honest, Tesla's reputation has taken a hit recently, even before this event. In the last half year or so, there's been quite a lot of talk on Chinese social media about Tesla cars and the alleged reliability risks. I see plenty of memes poking fun at Tesla as well on various social platforms. There have been a number of cases in which Tesla owners claim that the cars failed them, and yes, there have been a few crashes too, attributed to alleged loss of control issues. Now, I do not know if this is truly a Tesla issue or something else. I think Tesla is a great company, and this video isn't about Tesla, but this might possibly affect Tesla's near-term sales and reputation, as some buyers might fear that it is a real quality control issue, at least with locally made cars. Naturally, this may indirectly benefit its Chinese competitors like Nio, Xpeng, and liauto. As we can see here, the recent negativity has certainly had some effect on Tesla's sales numbers. With this out of the way, let's get back to the main topic. What is far more important is China's big ambitious plan for all new vehicles sold in the year 2035 to be eco-friendly. They have been very aggressive with subsidies for EVs, and Beijing itself has limitations imposed on gasoline-powered cars. Evidently, it has worked really well. Sales of EVs grew 240% in March this year, compared to the same month 1 year ago. And 515,000 EVs were sold in the first quarter of this year, an explosive growth of 280% compared to the same period last year. They have also announced that electric vehicles should make up at least 20% of all new car sales by the year 2025. This is huge because just last year alone, China sold more than 25 million vehicles. So as you can imagine, even 20% of this market is astoundingly huge. That would be approximately 5 million EV sales in just 1 year. China sold approximately 1.3 million EVs last year. 5 million per year would be about 380% of current levels. So I think we can all agree that the Chinese EV market will continue to see astounding growth in the next few years. For comparison, the US sold less than 300,000 EVs in the year 2020. Just last year, China addressed the UN Assembly and declared its aim for carbon neutrality by the year 2060. The President of China said that it would aim to hit peak emissions before the year 2030. Now you can probably see how all this ties up with the year 2025 and 35 targets for EV adoption I just mentioned a while ago. There are approximately 280 million registered vehicles in China, and the great majority of these are gasoline powered. So as you can imagine, reducing carbon emissions from cars by increasing EV adoption is a very significant play in this push for a cleaner, greener China. So we're talking about a country's roadmap for its future that relies heavily on its population adopting electric cars. In my opinion, you can't really go wrong investing in the Chinese EV stock, as there will be lots of space for growth even with increased competition. This spreadsheet shows the enterprise value of the three Nasdaq-listed EV brands. Enterprise value is the market cap of the company plus debt minus cash. It is a great way to gauge the valuation of a stock when used as part of a ratio. We just want to pay attention to the ones I've circled for now. Enterprise value divided by cash flow from operations, divided by operating income, or divided by gross profit. These three values show a multiple that can be compared to the same ones for Nio and Xpeng. In this case, the lower multiples imply that Li Auto is relatively undervalued compared to its peers in the same industry, especially when you consider its finances. Next, let's have a look at the 2021 first quarter EV total sales numbers. Nio at first place with 20,060 cars, Xpeng in second place with 13,340 cars, Li Auto in third place with 12,579 cars. Now this is where it gets interesting. Let's examine how many car models each manufacturer has. Nio is currently selling 3 EV models. Xpeng has got 2 models on the market. Li Auto has a grand total of 1 model for sale. In other words, all those 12,579 cars sold in the first quarter of this year are for Li Auto's only car right now, the Model 1. So how has this one car by Li Auto done so well? 2 words: range anxiety. Cold weather and immature charging infrastructure in China can make owning a pure battery EV a nervous experience at times. We will have a look at those in a bit. If you like the content so far, please hit like before the zombie eats it. I appreciate it. Thank you. To overcome the potential EV buyer's greatest fear of a flat battery, the Li car has two power sources. It is an extended range EV that has both an electric motor and a gasoline engine which produces enough power specifically to charge the battery. Because it doesn't use the gasoline engine to actually propel the car, it is considered an EV. So when the battery reserve dips below 20%, the gasoline engine kicks in and charges the battery. So basically, as long as you can go to the gas station and top up the 45-liter gas tank, the car should pretty much keep going. The battery alone is rated for approximately 180 kilometers or 111 miles. With a full tank of gas, Liauto claims that this car can hit a range of 800 kilometers or almost 500 miles. With the cars from Tesla, Xpeng Nio, there is currently no backup plan. If you run out of juice, it's pretty much dead in the water and you're going to have to use one of those dead battery services. I currently reside in Beijing, which is the capital of China. And even here, with some of the best infrastructure among the Chinese cities, range anxiety is still a very real issue. There aren't that many fast chargers at the average charging station, and there are a lot of cars, which is why Beijing is famous for its traffic congestion. With the number of EVs set to explode, the charging infrastructure has lots of catching up to do. And more importantly, 90% of the Chinese population live in residential apartments, which means it is a near impossible task for most people to leave their electric cars charging overnight daily, especially in the densely populated big cities where ironically electric vehicles are usually purchased. Amplifying these issues is the very low temperatures in some parts of China. In Beijing, where I currently reside, winter temperatures can drop as low as minus 20 degrees Celsius or minus 4 degrees Fahrenheit. According to a study done in the US with nearly 10 million miles of data, they found that variations in weather can reduce the range of an EV by 25 to 30%. And Consumer Reports recommends that to combat those effects and get the most range, one should keep the car in a garage and plugged in until you're ready to leave. Most EVs have cabin preconditioning that allows owners to set the departure time and desired temperature. The feature turns on the climate control and warms the cabin ahead of departure. But with the car plugged in, it will use the energy from the outlet and not the EV's battery. Similarly, Tesla Model 3 owner's manual reportedly recommends that the battery be warmed up in cold weather to unlock as much range as possible, and that this can be done while the Model 3 is plugged in because obviously that would not deplete the charge from the battery itself. So where am I going with all this? You see, when I first saw the Li Auto 1, I hadn't known of the existence of this EV brand, and so I went to do a bit of digging, and it struck me that this brand had grown exponentially quick. And after studying the possible implications of buying an electric vehicle for myself, I realized the appeal of Li Auto's car that it had for the consumer. You see, EV adoption is being pushed really hard by the Chinese government. Subsidies lower the cost of buying an EV that is both relatively luxurious and large when compared to conventional cars. In Beijing, where the gasoline-based car is limited by law to being driven into the city only 6 days a week, an electric car, on the other hand, suffers from no such limitation, and you can drive it into the city all 7 days of a week. So the pull of an electric vehicle in the capital is strong. But consumers today still have a very valid concern: the car's range when running on a battery, especially when it's cold. Norway and Sweden reportedly have the top EV adoption rates in the world. But what is often overlooked is that Norway and Sweden have a population majority that lives not in apartments, but in houses. This makes the recommendations by Tesla in Consumer Reports far easier to follow if you live in one of those countries. As I said earlier in this video, probably more than 90% of the Chinese city population lives in blocks of apartments just like these. Now I think you can see the hugely different situation here when one tries to follow the recommendations to maximize battery life. It's just not going to work for most people here until the infrastructure is vastly improved. That is the reason Li Auto has been doing so well, even with just one model on sale. By including a gasoline engine that can charge the battery, Li Auto has greatly reduced the range anxiety of the potential Chinese EV buyer. And since Li is the only one of the three brands to produce extended range EVs, it's got a nice niche carved out for itself. And here we have the breakdown of Li Auto's sales numbers for the last 9 months. The Tesla Model Y launched in January, and February was a big holiday here, and so sales was affected for all car brands. But you can see that sales has recovered in March this year, with it being the third best month in the last 9. And all this happening despite the much hyped threat of the Tesla Model Y bringing new competition to the three Nasdaq-listed Chinese EV brands, the Li Auto Model 1 still remaining the best-selling model of the three brands. In my opinion, this stock makes a good medium-term investment, especially if Li Auto can add to the momentum soon with the planned new model launches. That would allow the total sales numbers to properly reflect their success with the current EV model, that is the extended range EV. I would like to cover more in this video, but it seems like it is running longer than I had anticipated. So to recap, I have covered why I think Li Auto's EREV model has solved the range and charging issues that are specific to China. We have also seen that China's green roadmap requires the highest possible adoption of EVs to help meet its targets and how this ensures solid growth in its EV sales numbers over the next few years. Lastly, we have seen what Li Auto has accomplished with just one model launched so far. This gets me excited to see how it will do with the upcoming product launches. The latest April sales numbers have been released, and we'll dig into those in the next video, but they look good. We will then look at its competitors' numbers for a better idea of how Li Auto is performing relatively. I will take a deeper look into the company's financials and also review what buyers have been saying about their experience so far with the Model 1. Some information too about the upcoming new models and their expected launch dates. Finally, we'll look at some charts and short interest data. If you think that this look at the company and fundamentals has been helpful, please bite that like button and I'll know you're hungry for a follow-up video. If you would like to see more videos covering Li, Xpeng, Nio, and even other stocks both Chinese and US, do me a huge favor please and scratch that subscribe button so you'll know when I publish a new video. Thank you for your precious company and I'll see you soon.